Hello, I'm Jonathan Noyes, Head of Investment Research at Wealth Club, and today I'm with Fred Ursell and Felix Danczak of Pembroke Investment Managers to talk about the Pembroke VCT. So we're here to talk about the VCT. Fred, what is the VCT?
So the Pembroke VCT was established in 2012 with quite a simple but a powerful idea, which was to build a venture capital trust that was designed by entrepreneurs for entrepreneurs. And that point is really important. It's something that separates us from all of our competitors, and it's core to our DNA. And you see it in everywhere from across Pembroke, from the way we partner with the founders of the companies that we're looking to back, through to how we've designed the fund for the investors who support us. The fund itself is now 45 companies in its portfolio, and they are split across three core sectors, which are technology, consumer, and business services. And they're also across a range of stages now. So we've had a busy year this year. We've invested in 7 new businesses, and so we've got a portion of the portfolio which is in early stage, fast-growing companies, but we've also got companies that we've held almost since inception, large, profitable, mature companies that we think are exit ready. The VCT is comfortably north of 200 million in terms of assets under management, and this year we're seeking to raise up to 60 million to deploy into a really exciting pipeline of both new and follow-on investment opportunities.
And so for investors who aren't familiar, who are Pembroke and what's your role there, Fred? And Felix, you're new to Pembroke, so it'd be good to understand your role as well.
Take it away.
So I'm head of investment at Pembroke. I've been here almost 7 years now. Before, I worked in corporate finance. So I'm really the boring guy in the room. I bring the institutional rigor and discipline and try and combine that with Pembroke's entrepreneurial flair and DNA to make great investment decisions. And I'll quickly hand over to Felix, and you'll soon really realise that I am the boring one in the room.
Well, you can tell that because I'm the one wearing all black with a gold Casio, and so therefore I must work in startups. That's how it works. I've been around startups for well over a decade now, not by choice, but entirely in the AI space. I've seen exits of north of 50, and indeed my last exit at Zuora, where I led marketing there to Silver Lake for 1.7 billion. My role at Pembroke is a super exciting one. I help the portfolio think about how growth will be different in a world where AI is the foundation of how we think about technology rather than deterministic environments like software to date. And it's really changing what's possible regardless of your industry. And it's a really exciting time.
Fascinating. I think we touch more on that later, but just initially, what sort of companies does the VCT look to back? And with Felix's involvement now, are you moving more towards AI-focused companies?
I don't think so, but I'll let Felix touch on the AI stuff. In terms of what we're looking for in an investment is quite simple. We invest in people. Above all else, that is the most important thing that we spend most of our time on. We believe that ideas are important, market is important, timing is also important, but the key trump card in all of that are the people behind the businesses. And we are obsessed with that. And so we spend a huge amount of time in due diligence assessing the people. We bring our own expertise to the front. We bring in third-party consultants to build a holistic picture of the management teams, the founders, the CEOs, to see if these are the people that we believe can drive a venture-style outcome. In terms of stage, we're investing in what I would call established companies that have something that's working and they've proven themselves. Typically, that looks like north of £1 million in annual revenues, because at that point, they've proven they've got something that works, customers are buying it and coming back in droves. We can interrogate that data, try and build some conviction that this trend is going to continue. And then from a sector standpoint, we invest in 3 sectors, so business services, technology, and consumer. And the last point is an important one because it makes Pembroke quite different when compared to its peers. We've got a great track record of investing and exiting from consumer businesses. And we just think that provides our investors with some really nice diversification from a sector standpoint. And my last point on what we're looking for is we're looking for founders who really believe in a partnership approach to investment. So we're not passive. We get really involved and help out as much as possible to try and move the odds in their favour. And Felix will touch on a bit later, the really exciting stuff we're doing on the value creation side of our approach to working with companies.
Well, let's cover that now, Felix. So value creation, AI. Can we delve into more detail in your role at Pembroke?
What do I do? So really, I pick up where Fred puts down. Fred finds those extraordinary investments out there, and then I take over once we've brought them over the line. My role is to come inside, really very much, you're absolutely right, partner with those organizations and help the founders think through those key strategic challenges, but with the lens of what's now possible with AI, but also just in growth in general. You'll often find, particularly at that £1 million revenue stage, they've got product market fit, PMF, but they don't necessarily have the awareness of how to take that from 1 to 10, 10 to 20, because it's a hard, long road, and a lot of the things you do well at 1 won't work at 10. So I'm there to help people think about scale and growth just as much as I am about new technology. So I'll go in and I'll work with that leadership team, hand in glove, multiple days a week, until they feel they've got a strategy that's going to set them up, not just for the next 12 months, which is often what you're thinking about when you're early stage, but for the next 24, 48, and even a 5-year-long strategy. Because AI might be changing the world, almost feels like week by week at the moment, but the fundamentals of the economy still remain the same. The rules out there are still the same.
And so turning to recent examples, you've always got a good recent example, Fred, of investments you've made in the VCT.
I'm going to actually steal this off him.
Go for it, Felix.
So I've been working with a company called Popsa, who I'm sure some of you will know. Yeah. So we invested in them back in 2018 and have invested in a follow-on several times since. Again, the underlying economics of that market, it's a big market, photo books, people buying them for friends and family, and they're always going to want to do that. That's something that's memories are really important to us. But producing those books used to take a lot of effort and energy, classically like 6 to 7 hours to create one. With the new technologies available, we've now gotten that down to 6 minutes. You can do it online in real time, with the AI deciding which photos will work nicely next to which other photos to present something not just of memory, but pleasing to the eye. And they're doing incredibly well and expanding into America as we speak.
Any other examples?
I'd also take it to companies like Lyma. Again,
largest
they're out
holding
there,
in the portfolio.
Large holding in the portfolio. They own the patent for cold laser technology, which is showing some phenomenal impacts. I mean, I would have more wrinkles than I do if I didn't have one of the machines myself. But the AI we're using there is not, of course, in the device. That is about cold laser technology. But it is about how we're able to impact their marketing and get tight feedback loops on what's working, what's landing, and then changing that marketing copy, changing that content almost in real time, almost day by day, week by week. And I'll give one last example, a company we invested in 6 weeks ago, a company called Peak AIO, who are, and this is a great, perfect example of, in a gold rush sell shovels. They are close to being a pure AI company as possible, but they're redefining latency and data structures within data warehouses. It sounds deeply unsexy, and to an extent it really is, but it's this kind of infrastructure that underpins the success of everybody else, and they're doing it in a really unique way. I'm super excited to work with them too.
Very interesting. And so I guess the ultimate goal is to generate some exits. How's the environment been for you? I think past couple of years, it's been pretty slow for exits generally in the venture capital world.
You're right. It's been a rough couple of years for the entire industry out there, but we do see it opening back up. We have 3 or 4 current exits currently on the table where we're actually active at the moment. And I think what's really important, especially as someone who's coming into Pembroke new with an outside eye, is that Pembroke is incredibly conservative in its valuations. Which is actually a benefit to both the startup and to the investors. Nobody really wants all that pressure to outperform a really, really high valuation, even though more money is sometimes useful. But it means that when it comes to the point of exit, you are reasonably valued. And in fact, you can then sell for more than that carry value, and you have real value to a strategic. And I'm really excited. We've got, I think, 8 companies in the portfolio at the moment worth well over 50 million. And I think it's going to be an exciting couple of years.
Very interesting. And so turning to risks on the flip side, Fred, how would you describe the risks in this portfolio?
We've thought about risk mitigation 3 ways. Firstly, at the portfolio company level, we're investing at a stage where the companies have proven themselves. So I mentioned the revenue earlier. An interesting example is our most recent investment, a company I can't name yet, but they're doing around £1 million in profit a year. So if you think about those typical venture investing, thinking that you're investing at the ideation stage. We're not. Typically, we're investing a bit later. Point two, at the portfolio construction level, we have really been thoughtful about our diversification. So we've diversified not just by sector, with consumer, technology and business services, but now the portfolio is really diverse by stage. So we've got the early stage companies that we've just backed and some really mature, large, profitable companies. And as Felix says, we've got a bunch of them that are valued above 50 million and are approaching the kind of point where they're becoming very exitable. And then the third reason how we've mitigated some of the risk is we've been really tight about how we've built the VCT. So we've been tight and focused and kept it really quite small. So we've only ever raised what we think we can deploy over a 12-month period.
And so, summing up everything we've discussed, for investors looking to back a VCT this year, why should they be adding to Pembroke VCT?
Well, Pembroke is a VCT that combines entrepreneurial DNA with institutional discipline. And that's the key point. We invest in great companies led by brilliant people at the stage they're ready to scale. We then wrap our value creation team and services around them to give them an unfair advantage. The portfolio now is diversified across sector, but also across different stages. And the other really key point why you should consider backing Pembroke is we've really thought about the investor when building the fund. So from the fund size that I mentioned earlier, through to the way we structure our performance fee, through to how we distribute dividends when we achieve profitable exits, independent third-party market commentators have reviewed those things and called us market leading. And we're really proud of that fact. So to summarise all of that, I'd say it's the combination of the entrepreneurial DNA, the institutional discipline and rigour, and a partnership approach that makes Pembroke a really compelling proposition.
Can I add something?
Go for it, Felix.
I think it's also that we believe that value creation isn't just about giving the team money and then sitting on a board and getting out of the way. I've had VCs in my past who feel that way, but we believe that it's about the journey with them. Like, I'm working with them hand in glove. We have people in our team who are focused on finding the right talent, which is obviously the number one problem in startups. So it's not just we'll see you every quarter. It's we'll see you every week. And we know our funds intimately. We know the teams intimately. And so we have a really good handle on how to help them, not just in the long term, but in the short term. And the long term is made up of short terms. And that's really exciting.
That's a very good point. It's the entrepreneurial flair. Well, Felix, Fred, thank you very much.
Thank you.
Thank you.
If you're watching on YouTube, please press like or subscribe to the channel for more.